What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to Watchlist Wednesday for Wednesday, October 20th, 2021. We're going to be looking at a sector that is in the news, and I think it will continue to be in the news in the near future because other people's pain can lead to trading profits, right? So as an example, if energy prices are spiking, gas is $4 a gallon, things are looking really bad right there, and a lot of folks are feeling the pain at the pump, that is probably a good time to focus on energy stocks, refiners, major integrated oil and gas, things like that. Those tend to be very good traders during that kind of environment. So pain can turn into profits. So let's take a look at this chart. This chart is a Google Trends search for the words supply chain. And you can see the interest over time, going back to 2004, it really hasn't done much. And we're starting to see a pretty decent spike higher. In fact, I think if we zoom this into the past 12 months, we can get a little bit more data. You can see it's starting to spike higher. There absolutely is the perception of risk that the supply chain will break down enough to the point where things start to cost more. On top of that, we've got very loose and aggressive monetary and fiscal policy, so that can affect inflation. And so those two things together lead to the perception and the narrative that things are going to start getting more expensive. There's pain. Well, where's the profits? So we're going to focus today on ag stocks. We're going to focus on companies that deal with food and food production. So my favorite ETF to watch here is Moo. Isn't that a great name for an agribusiness ETF? Now, I can tell you right now that this, for me, was an amazing trader in 2007. And even 2008 during the crash, you can short it as well. Back in 2007, you had names like Potash, Monsanto, Mosaic, all those fertilizer and chemical stocks were a massive weighting, and we saw huge moves to the upside in this ETF. But since then, volume has really dried up in this ETF, but it's still very nice to track things with. It has a pretty diverse set of holdings that allow you to really drill down and look at the components and say, okay, which ones are going to start moving here? So if we go and look at this on a weekly chart, this is about as textbook as a continuation can get, right? The whole thing gets crushed back in March and April of 2020, just like everything else. Straight shot higher. We get to new highs in October 2020. We see a gap up into the election with the perception that inflation could come into play as more fiscal stimulus comes into play. We've been consolidating for about 6 months, and we just broke out. On a daily chart, this is what it looks like. This is a very bullish chart. We continue to see higher highs over the past 2 days. We've been seeing higher lows even while, okay, so look at this chart and compare that to a chart of the S&P where we saw pretty decent movement to the downside and we saw lower lows. If we look at a chart of MOO, we saw higher lows. So there is relative strength involved, okay? Now, Moo is not a super concentrated bet in fertilizer plays anymore. It's fairly diverse. It's got machinery and equipment names, and it also has food production and things like that in there. So what I want to do is step through 3 separate themes that you can work with. And these 3 themes, they're going to trade a little bit differently from one another, but they all have pretty decent continuation setups. So the first one we want to look at is John Deere. All right. So if it costs more to make food, then that helps the profit margins of farmers and they can use that extra margin to go buy farming equipment. All right. That's the basic idea. So if we take a look at John Deere right now, we've got a very clear level, 325 to 330, that has acted as support back in June. And it's also recent support as well. If we zoom in, I just want to show you the price action from the 15th. We saw this really nasty gap down, a clearance underneath support. Most, what we would consider retail traders or uninformed traders would say, oh, it's a breakdown, it's a gap and go and things like that. But when we see the aggression in which that dip was bought, it indicates to us that institutions are very involved right here. Okay, so it just bounced off of this support. It's got a key high volume node right around 352 that should act as a magnet. And then we've got another high volume node up to 370 or so. If the cost, or if the commodity prices for corn, wheat, soybeans continue to go up, or if they start to go up again, then this should be a pretty decent bet. It's right at support. You have a very good place to define your entries and define your risk. Okay, so from there, you can go with Deere. You can even include, if you wanted, you could include Caterpillar in that bucket, and any other machinery and equipment names. You could even put Tractor Supply in there as well. That's more of a retail play, but it's similar, right? They supply tractors, hence the name. So the next bucket you want to look at are the fertilizer companies. Now, Potash, POT, got bought out. Monsanto went private. All right, so it's not as tradable as it used to be. All right, it used to be a lot more fun, to be completely honest. The big one that I follow is Mosaic, and Mosaic already is a little bit extended. It did see a nice longer term. I mean, look at this on a weekly chart. It saw a nice longer term breakout, and we've got a very clear level right around $51 a share. Okay, so that's about my price target. Now, in the meantime, I want to point out this volume shelf right here that's going to come into play. What that means is anyone who purchased this stock from anyone who bought the dip 2012 or played that range through 2015 into that breakdown, they're really starting to think, should I get this back at break even and just bail? All right, so that is a very good resistance level to work with. Okay, so it's one of those where it is a little bit extended in the short term, and we should expect a little bit of a pullback. Now, into that first pullback, there should be a really nice opportunity. We've got the rising 20 exponential moving average as well as the anchored VWAP from that breakout on the 23rd. So that's going to be right around 38.98. For me, especially with commodity related stocks, I prefer to buy pullbacks than breakouts because the momentum isn't always there in those kinds of plays. So if we do get a nice pullback in Mosaic and it starts to base out on a very short term, that should be a very good entry. Within that bucket, I think BG, it's a little bit more diversified. This is Bunge. They have other products besides just straight fertilizer. But again, if you were to see a pull into this prior resistance and this volume shelf right here, that would be a very good place to start planning for some entries in that name. Okay, so those are the two categories. We've got mining and machinery, and we've got ag chemicals. All right, the third one's going to be meat packers, or the people who take the raw product, process it. Processors, meat processors, that's the word I'm looking for. So the one I'm looking at is Tyson, TSN. All right, and this one does have the look of a very strong breakout. My initial target's going to be the high volume node as well as the gap fill at about $90 a share. So honestly, you can go into January, February, look at the $90 call options and see if they're affordable enough relative to the risk that you'd have to take. And that's a decent bet. It's got a very nice looking cup and handle pattern. You can see a lot of volume has been built just at this level. And if it clears above that, then I think $90 is a reasonable target. Okay. You could also, the other one I think is a decent trader as well as Archer Daniels Midland, ADM. Okay. But right now Tyson has the best setup right here. That's not to be confused with Taiwan Semiconductor, which is TSM, which is a completely different can of worms. Okay. That's semiconductors. Just make sure that you're not accidentally typing TSM because that's the one you've traded the most. It's not like I've ever made that mistake before. But it is possible. So TSN. So we've got our three sectors in the agribusiness sector. All right, the three buckets. We've got farming and machinery equipment, we've got ag chemicals, and we've got meat processors. Those are the three you want to look at. I think that this is most likely going to be a sustainable trend over the intermediate to, let's just say, 2-year time frame. If inflation continues to pick up and if agricultural prices continue to rise due to supply chain constraints, everyone else's pain can be your profits. All right. So that's one thing you absolutely should pay attention to. That's all I got for today. If you have any questions, feel free to ask them in the comments section. If you're on YouTube, if you're on our site, I highly encourage you to go watch our free training on how I use these kinds of charts as a roadmap to figure out where our price targets will be on these stocks so we can structure our risk using the options market for very powerful profits. That's all I got for now. Take care, everyone.